are you hanging around people that ask you tough questions that make you better? One of our favorite questions that we asked that we learned from Brock's dad was, if you were no longer able to create income tomorrow, would your same amount of income continue for the rest of your life, even if you could work another day? We've had the privilege of asking men that question and families that question a lot over the past couple years. And the answer is, it has yet to be 100% my income will continue as is, no questions asked, for the rest of my life.
Guaranteed means that, actuarially speaking, we have the ability to purchase our net worth ahead of time and then build and grow into it. So we're going off of match a guaranteed event, which is death, with a guaranteed contract, which is life insurance.
Purchasing whole life premiums, like making a whole life premium payment, is the third greatest thing you could do for your financial life, hands down. Number one is creating a connected cash flow so you can fight off lifestyle creep. And number two is getting the right protections so you know your family's plan will work out under any and all circumstances.
Welcome to the Cashflow Legendz podcast with your hosts Nate, Brandon, and Brock. Remember, our insights are not direct financial advice, so consult with your financial team before making any decisions based on the topics discussed.
Welcome back to Cashflow Legendz. If you are watching us on YouTube, you see me with this huge grin because before we hit record, Nate and Brock and I were just catching up because I told Brock I hadn't seen him in a couple of weeks, and then when him and Nate were here, I was gone, and we were just reminded as we opened up in prayer how thankful we are that we get to hit record and talk about something that we enjoy talking about, no matter if we hit the record button or not. And Brock, as he always likes to do, likes to rub it in when he doesn't respond to me and Nate. He likes to remind us what he was doing, which was playing golf. So he was too busy for us because golf was more important, and that's okay. I guess we'll recover, but that's why we were dying laughing. Among some other things that we were making Brock get uncomfortable in. That is always fun to Nate and I because we have a few years on him. So, guys, before we get rolling today, tell me one thing that you are excited about this week or you are proud of from the past week. Brock, you go first. Putting you on the spot.
I played golf in St. George, Utah last week, and it was phenomenal. I played great. We had a Riders Cup team. Challenge old guys, so over 40 versus under 40, and the young guys pulled it out with 1 point, literally 1 point.
Wow.
And my longest drive of the week was 393 yards, right down the middle. It was awesome.
Okay.
Is that the best drive of your life?
Yeah, that is my new longest drive.
That's pretty impressive.
That's very impressive. What's not impressive is old guys was over 40. I take offense to that.
It was just how it shaped out.
All right, Nate, what about you?
So we had an in-person event. Me and Brandon do an in-person event back in our hometown area for our company, ULC. And I'm just grateful and excited about the new relationships, new connections that were made. Just the overall experience. That was the first time we did it in the morning as opposed to doing it in the evening. And I don't know, it just, for whatever reason, it had a different feel to it. And I'm just excited about what's going to come from that. And I mean, without getting into too many details, the Lord just was able to use me and some of my past experiences in the life of somebody else, that I just found out made a big impact. And I'm just grateful for that, because your trials and your struggles, depending on how you respond to those things, can become a huge encouragement and part of someone else's story one day.
It's good stuff. I would definitely agree with that for me, Nate, on Saturday morning, and kind of how it all intertwined and how the Lord's always working. But I'm going to say watching our oldest, who is on the varsity football team, which is a big deal as a sophomore, score the first ball he ever touched in varsity was on a jet sweep, and he scored from about 20 yards out. And, you know, you think as an athlete who loves sports your whole life, the coolest thing ever is when you succeed personally, until you watch your kids do it humbly. I was like, I'm still like, and it doesn't have to anything to do with the fact that he scored. It's the fact of how his teammates celebrated and the fact of how excited he was because he doesn't get excited about nothing. And to hear my wife screaming, no, 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 yes, 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 all the way through the whole play, which Nate's heard, that was a blessing. It was just a really cool thing to experience and just to see the joy of all the work he's put in. So,
Yeah, last year getting to see my son go 6 for 6 from three in one of his games, that was a fun night.
yeah, it's a really cool thing to be reminded. And Brock, I know your dad and your mom spend a lot of time watching your brother, now watching you. There's just something about watching your children succeed, even through failures that have led to the next success. That if I really think about it, I think about that's how the Lord loves us when he sees us, loving others and, loving him and all that we do, and him going, well done. All right. You're not as dumb as I thought you were. That's my words to me, not to anybody else. So, all right. Today we're doing a quick review. So we've been spending a lot of time talking about whole life and becoming your own banker and the infinite banking concept. But about a third of the way through, Nelson does a review like any great teacher does on review of part 2. The first thing that he says is, it's 3 bullet points. It's real short and sweet, is we have to understand the human problems. So I'm going to go through what those are related to laws, and then we'll just kind of just high level touch on those. Because if he says, I can hear Nelson saying this because I've listened to so many things he said, on YouTube and things like that and our mentors. But he says basically, if this doesn't click, you're hopeless. He didn't say it that way exactly, but this has got to click first. That behavior matters more than anything. And so anytime that someone's trying to talk to us about mechanics and the machinations and the semantics of policies, Nate and I and Brock have gotten way better at understanding it's about behavior first and asking those questions, because this is about building a system. So he actually says, for instance, if you can't whip Parkinson's law, then don't bother to read further. Now you have to remember Nelson was in the South, very direct. So don't take offense to that if you're not used to that direct kind of conversation or talk. But what does he mean by if you can't whip Parkinson's law? Because there's 5 human behavior things he talks about the most. So Nate, if you can't, or Brock, either one.
I would say on Parkinson's law, that's the biggest thing. And I don't think we talk about it enough, is Parkinson's law, which other people might call it lifestyle creep, or your expenses just rising to meet your income. Like that will far exceed the taxes you pay, like any expense that you can think of that, fees, costs, insurance costs, tax, like those pale in comparison to lifestyle creep if you allow it to happen. And so you've got to get that first taken care of, or not. Like at the end of the day, all wealth is created through free cash flow. What's the difference between your income and expenses? If you don't know how to increase that or get it under control, it doesn't matter what system you use, you're not getting anywhere.
Yeah, it doesn't matter how much money you make, it matters how much money you keep. And so, if you make a ton of money but you can't keep any of it, then you're no better off than anybody else. I mean, you're basically you're just a higher level of poverty.
You're chained to the system with a higher income. And just to be very clear, anybody listening, so you don't think we're pompous or got it all figured out, this is a fight that I personally have to fight every day. And when I stick my head in the sand and act like it's not there, it gets worse.
Way worse.
Fast.
Says my credit card bill this month.
Yeah, I texted Nate the other day, kind of a touch on Parkinson's law, and I said, I almost have become convinced we would be better off not using a credit card for right now to be sure we're whooping Parkinson's law, because it ends up taking advantage of us and the behavior more than we take advantage of it. Yeah, we get the free miles and we get this and we get that, but that's all partly by design to keep me swiping that sucker without hesitation. So that's Parkinson's law at a simple level. We got to whoop that. Now we have ways to help our members or prospects beat that. We use a program and a mindset called Currents. Brock, you've been putting out some awesome stuff I didn't tell you that ahead of time. I want your head to be too big. On working with people at all income levels and realizing this is money that's leaking out of their life. And what you're showing them is how to develop a system to overcome Parkinson's law.
That's right.
That's what Currents is.
Yeah.
And so that's really cool.
Were you talking about my LinkedIn stuff?
I'm not telling you what I'm talking about, but yeah, maybe. It's been good.
I appreciate it. I'm getting back on that. So thank you.
It really helps me think about how I think, and I'm able to take that into my life and my conversations every day. And what I've found in that is it's because we're talking about Parkinson's law. If I'm talking to a 20-year-old or 60-year-old, if I can expand the gap between income and expenses and then treat it better than I've been treating it by the systems I built around it and the places I put it, I'm going to, by default, in a good way, keep more of my wealth to create more wealth.
That's right.
And it's got to start there.
That's right.
And so good stuff. All right. The next law, Nate, he talks about is Willie Sutton's law. That's a fun one. What does Willie Sutton say, Nate?
Willie Sutton was a bank robber. And whenever they asked him why he robs banks, he said, because that's where the money is. And the point that Nelson makes is anytime money is accumulated or stored, somebody's going to be coming after it. And, there's a relevant story right now with a client of ours. I'm not going to say too much. Client of ours who inherited a decent amount of money, and the people around her, knowing that she inherited that money, have been asking for help in various ways.
Yeah.
And her heart is to help people. And so she's been helping at the expense of herself sometimes. And that's, you think about like lottery winners as an example. They win the lottery, and then all of a sudden every cousin that's on their family tree starts hitting them up for help and all this stuff. So, I mean, that's just one example, but the most relevant is the fact that the IRS is always after anything that we create.
Yeah, there's Brock, on your LinkedIn again, you made a great point about these gravitational pulls on our money that we don't even see. Like a lot of times, I think one of your examples was the person who makes 80 or 100 grand, but really when it's all said and done, they're really only making 50 or 60 grand. I don't remember the exact numbers, because what does making mean? Well, there's what you see on your salary contract, and then there's actually what you get.
Yeah.
And those are very different numbers. So Willie had it figured out. He's like, let me just go where the money is. And what he's really saying per Nelson is we can create an environment where the money is more beneficial to us and where it goes than going to someone else's place all the time. And that's what kind of Nate's describing. When people need help, the more money we have, then lo and behold, you have all these cousins from these other places that you've never met before, or whatever the case may be. Or they know that your heart is desired to be helpful, and then you have money, so they naturally go to where the money is.
All right, and let's talk about whole life insurance, and really, why Nelson brings that up is for a few reasons. One is whole life insurance predates the income tax code. So the rules are different for whole life insurance than they are for other assets. And another is, in most states, almost every state, whole life insurance is a protected asset. Which
43,
means,
I think.
43. Okay.
Yeah, it's a good chunk of them. Check your state laws and everything like that. But that means that in the event that someone tried to sue you, they cannot access your cash value in your policy.
Yeah. Nate, you reminded me of something that's come up a lot lately. And Brock, maybe you'll touch on this real quick for human behavior pieces. We've only ever lived in a legal contract world. Like, we've never really been taught what a legal contract world is compared to a private contract. And so a lot of times people think in whole life terms that it's the same kind of contract as if like your car insurance. I've come across that a lot here lately, and they're totally different. And so I've had a conversation a lot of times with, let's talk about how car insurance and homeowners insurance is different than whole life insurance, because they're built completely different on different contracts. There's a legal contract, and then there's the private contract with whole life. So do you ever run into that, Brock, on a misunderstanding of whole life in general and where wealth resides?
I don't think that I run into that very often.
Okay.
I just talk about the fact it's very different with life
Mhm.
insurance, because you are either dead or you are not dead. And so it either pays out or it does not pay out yet. And I think it's very clear, unless it's in the first 2 years of the contract, then there's some stuff that has to take place. But with car insurance, it's always, did you get pictures? Who's the other driver? What happened? Where did it occur? Like all these things, because their job is don't pay the claim. Whereas a life insurance company, they know they're paying the claim on some of these stuff, but the odds are very, very low unless it's whole life.
Yeah, that's good
Yeah, and I
stuff.
was talking to somebody who was at our event, and we were talking about the difference in insurance and things like that. And one of the things that I brought up to him is every other type of insurance that we pay for is an if this occurs scenario. Whole life insurance is a when this occurs scenario.
That's good stuff, Nate. And Brock, I think it's your dad. I don't know where he got it from, where he talks about when this occurs, we guarantee there's a win, WIN. I really like that. I relate it to sports. Is there anywhere else I can put my money where I am guaranteed to be successful in that competition? No. And so then we realize it really is not overcomplicated. It's really simple.
Yeah.
And so, all right, so that's Willie Sutton's law. The other one is the golden rule. He who has the gold makes the rules. All right, this is what Nelson said, the golden rule we've heard of before. What does that mean at a very high level, simply, when you guys hear that, knowing what you know about whole life and paying premiums and the privilege it is, and how that pertains to opportunity finding capital, and who has the gold makes the rules?
Yeah, a lot of times you hear cash is trash, which is a stupid statement. Cash is king. It has been and always probably will be. But even more than cash being king, liquidity is king, right? You might have cash in your 401k, but it doesn't matter. So those who have cash that is liquid and accessible, those are the ones that usually tend to find the deals. Like, there's not too many people that I don't like. How do I say that? There's not a lot of people that I know who have a ton of cash on hand that they don't constantly see people coming up to them talking about deals or things that they could do. Like, when you have money, somehow, some way, opportunities seek you out. I don't understand it, but it happens, and you have better opportunities when you're a better saver and you have more cash.
I remember someone saying, I don't remember who it was, but I remember seeing an interview one time, a very successful entrepreneur, and he said, money is always looking for the best home.
That's good.
And, he was talking about essentially the way you treat money, the way is ultimately how opportunities are going to find you. And yeah, I remember saying this on Twitter one time. Dave Ramsey almost had it right when he said cash is king, but we would say cash flow is king. Because it doesn't matter. It doesn't matter, how much you have on your asset column if you can't access it, like you were talking about earlier, Brock.
Well, the point that you guys are both making that I think is really helpful here is we first have to decide if we want to be in control of cash or capital that will do multiple things for us. And that's a big piece that most people have a hard time overcoming, is when they read Nelson's book, Becoming Your Own Banker, or Case for IBC, or Building Your Warehouse of Wealth, or they see him on YouTube and they come to this about whole life, they're first getting over the fear of what they think they knew about whole life that's just not true or half truth, and then how to use it. And so that's a big piece. So I love cash. I came from that path, pay off everything in cash. And so I tell people all the time, I could have taken those same principles that Dave Ramsey, that we live by, that got a good result, and I could have paired it with whole life and created a more valuable outcome with more peace of mind, more certainty, and more control, doing the exact same thing, just with a better system. And so for those that love to operate in cash, what if you could operate in cash and create more opportunity for yourself simultaneously? That's really what we're saying. All right. So the golden rule is that opportunity finds capital. And Brock, on your point, I really liked it, is why is that the case? I think it's because we go from being a hoarder and a scarcity and hold it and don't want to give it up and accumulate, to going, oh, my money can give me more than one option at a time. It can be growing and sound and steady and peace of mind. And if I want to go take a little bit of a chance on something I think I believe in, I can do that in a way to where all that I accumulated is not gone.
That's right.
And that's way more peaceful.
Yep.
And so, all right, the next thing he talks about is use it or lose it. This comes up a lot in conversations with members that have started a whole life policy. And this is something that Nate and I really working hard on with ULC, and they haven't formulated clear targets of what they want to do with their system if they want to do something with it. Let me be very clear. Brock brings up this point all the time, and Brock is dealing with a different mindset than most of the members we start with. Brock's already dealing with people who know how to create wealth often. Nate and I are often dealing with people who are trying to get out of debt, reposition bad debt to good debt, get out of the headwinds of credit card debt, all that. So we do agree with what Brock says, that you can't just pay premium and get rich. But what we've also seen is paying premium for most people we interact with is a great first place to start, to then get clarity on how we take care of debt, or how we make a down payment on a house, or how we finance a new business opportunity, or how we reposition debt in our business. Whatever the case may be, it makes you more versatile and you get more clear on how to use it every time you use it.
Yeah.
And so what
Purchasing whole life premiums, like making a whole life premium payment, is the third greatest thing you could do for your financial life. Hands down.
What is number 1 and 2?
Number 1 is creating a connected cash flow so you can fight off lifestyle creep. And number 2 is getting the right protections so you know your family's plan will work out under any and all circumstances.
Let's go. That'll go. You know, and then I'll add this part. Are you hanging around people that ask you tough questions that make you better? One of our favorite questions that we asked, that we learned from Brock's dad, was, if you were no longer able to create income tomorrow, would your same amount of income continue for the rest of your life, even if you couldn't work another day? We've had the privilege of asking men that question and families that question a lot over the past couple of years. And the answer is, it has yet to be 100% my income will continue as is, no questions asked, for the rest of my life. And I'm talking about big time money earners all the way down to, teachers just getting started. The answer has yet to be yes unequivocally. It always is something like, well, 8 months. I heard 8 months the other day, which probably means they probably got close to $1 million sitting in cash, me knowing their situation. But guess why they have that? Because they experienced the unexpected with a health event in their family. And he said, I'm never getting caught again dealing with that. So he already knows the priority of protecting income earning potential, because he is the only income earner in the house. So use it or lose it. And this is the hardest part. Nate, touch on this for a minute, because if someone hasn't really leaned into these other things like Parkinson's law, Willie Sutton, the golden rule, what's really going on, then what ends up happening is they think they're being sold on something, because we'll say things like, This is something that becomes easier to understand as you use it. Well, in the traditional world of sales, that is a one-liner to get you to buy something. In reality, this is something you have to start doing to understand why you want to do it more often. And so how would you reverse engineer that, Nate? Because that question or that hesitancy comes up early, depending on where they are in their learning journey.
Well, I think about Richard Canfield, who's an IBC practitioner that, a friend and mentor of ours. Whenever someone starts a policy that he's working with, he has some action steps on things that he wants them to do with their policy, to make sure that they don't forget why they did it to begin with. And there have been occasions where we came across somebody who had been paying premium for a while, and they called and they said, "Hey, I need you to remind me why I did this." you know,
Yeah.
and there is, when you first lean in and start learning, there is a level of excitement. And if you don't continue to lean in and continue to learn, then that excitement can be lost sometimes. We talk about trying to keep people close to the fire, because you get away from the fire, it gets cold. You stay close to the fire, you stay warm, and that warmth is really just, kind of the light of your knowledge of what you're doing and everything like that, and that excitement that kind of shines through. But, I think about like high school Spanish as an example. And like I took 3 years of high school Spanish, but once I got done with it, I didn't use it. And so now I can't speak Spanish. I could speak a little bit back then.
Yep.
And I would use it every now and then. Well, when I was in college, like I would use it whenever I was working in various places, when I had the opportunity to. But once I stopped using it, I lost it.
The cool thing is when we see the truth of use it or lose it, it's everywhere. If I want to be great hitting in my 40s, I got to practice hitting. I was reminded yesterday, I went to the gym and I did my round of pull-ups that I normally do on my first workout of the week. Well, I've been out of the gym consistently for about 3 weeks. So the 9 pull-ups I could do on the first set, or 10 or 11, were down to about 6 or 7 in 3 to 4 short weeks. Same thing with our money. This is why we have started doing the local meetups. When you get people in a room with other people thinking about how to think through this and use it, you gain confidence because you're not alone, because you're like, oh, everybody else is doing this. There are other people who are doing this. I can ask them questions. That's use it or lose it. Now, what I challenge people to do is go, why is it so easy for you to put your money in other places you don't understand? They just told me they didn't understand it. And now you're asking, or you're considering putting your money somewhere that you don't understand, but you want to. What's the difference? One is you taking control of your learning and thinking and understanding of where your money goes, and the other one is you're giving it to someone else. And we have to reckon with that. And so Nate and Brock and I don't know if Brock has said this before, but I know we say it all the time. If you drag somebody into this, you'll have to drag them around. It has to be that they want to learn it more than we want to teach it for it to work. And the cool thing is that we've all gone through that. Brock lived around it his whole life, but he didn't decide to really dive into it until what, Brock, 18, 19, 20, somewhere in there?
18, yeah.
Okay. But it was around you your whole life, but you weren't thinking about using it.
Yeah.
When you began to use it, then you began to go, oh, okay, let's keep diving into this.
That's right.
And so that's a mindset thing for sure. The other one is arrival syndrome. If you understand that arrival syndrome is going on, you cannot unsee it in all aspects of your life, because it's lifestyle creep is arrival syndrome. And the reality of like, oh, I think I've got it all figured out. It's as good as it's going to get. You can't teach me anything new. If you've got that buddy who's always caught a bigger fish than you, those kind of things are in line with arrival syndrome. And the reality is that arrival syndrome is real. And it is there waiting on us every single second of every day. And so, what does arrival syndrome mean to you guys? And something that, maybe one quick hitter that's relevant that you see all the time that you push back on in your conversations daily or in your own life? Don't jump out there at once.
Well, I know that one way that I've felt arrival syndrome and recognize it is the times whenever I stop reading and stop learning. It almost feels like life is kind of passing me up a little bit, like everybody else is passing me up. And so one thing that I've identified in my own life is like, there's always going to be something new to learn. There's always going to be something more out there that you need to lean into and try to understand. And so, but the simple version of that would be just admitting, hey, I don't have it all figured out, and I'm never going to have it all figured out.
Good. There's a direct correlation between that statement Nate just made and growth. Because when we recognize that we don't have it figured out or will never have it fully figured out, that's humility, if it's genuine. And genuine humility in my life leads to curiosity. What do I not know? Who do I know that knows this that I don't know? What could they teach me that is beyond what I understand? And that is not what the world teaches, but it's a really awesome place to grow new habits around.
Yep.
Because you hop on a call in the morning and instead of going, oh, I feel stupid asking this question, you go, Brock, you've got somebody that's dealt with this or you've dealt with this before. What do you know about this that Nate and I don't know? And literally in 10 seconds, you have more clarity on something that you would have spent a whole year, or I would have spent a whole year trying to solve myself, and probably get to a less better conclusion because I don't know the right questions to ask or the who's to ask.
Yep.
And so that's arrival syndrome. Is it's okay to build relationships where you can ask, hey, what do you know about this? And
Yeah.
Brock, if you don't have those relationships, that's a really, really good place to start.
Yes, it is.
It's probably one of the best places to start is, who's around you that asks you tough questions, that asks you to think about how you think, that pushes back, because nothing grows without friction. You think about that. Nothing grows without friction. It requires friction for it to grow. Requires it. So that means it's happening for us, not to us, which is something that I don't do well at sometimes. I think we all struggle with that when we want to get woe is me. All right. So let's talk about the next bullet points real quick. He talks about understanding the mortality graph that actuaries use in life insurance. Let's keep this real simple. Life insurance is based off of the law of large numbers that's been going on for a long, long time. And going way back to the beginning of our conversation, we made it clear that when you pay whole life premiums, it is saying that not if we die, but when the insurance company will pay a death benefit that's larger, substantially larger than the amount of premiums the person's paid. That is a law of large numbers. So if we take 1,000 men my age and they go into applications and underwriting, they have a very good understanding because of hundreds of years of data related to health, behavior, all these things they underwrite you for, of how many people in that 1,000-person group are going to pass at what ages. So that's all it is just math. And so when y'all hear that now, guys, do y'all simplify that any more than that, or is that a pretty decent thing, or would you add anything to it?
Pretty good. You got a bunch of people. You know how they all interact. You've been pulling in thousands of people since 1847, and you have every single one of their medical records, and you know when they died, how they died, the conditions that they had. You get pretty good at it pretty quick. It's kind of like when you were growing up and you'd play those video games and you didn't know the route to run.
Yep.
But then like each time you just kind of figured it out more and more, and then you finally got it, and you got it down pat because you played it so many times over and over again. Same thing.
Yeah, it reminds me of one of our members. I talked to him this week. He's talking about expanding his system by paying more premium in whole life. So his wife's going through underwriting. And he said, "Hey, my birthday premium's coming up." And I said, "I got to steal that," because he recognizes now by using it and being around how money works in other walks of life, business wise, that paying his premium in his whole life policy is the most exciting thing that he can do with a dollar for him. And he considers it like a birthday that he's earned the privilege to do because he knows what's going to happen. There's guarantees in there. So that'll segue us into guaranteed and non-guaranteed that Nelson encourages us to understand. Guaranteed and non-guaranteed is simply this understanding that the company works off a foundational base, whatever mutual company that we're talking about here. Brock mentioned 1847. That's how long that company's been around and paying dividends. Dividends are non-guaranteed. But Nate, guaranteed and taking over the banking function is still better than if non-guaranteed ever happened, if we understand these other behaviors and rules. Touch on that for just a second, because that really bothers people sometimes when I say that.
Well, we can kind of take it back to what we were talking about earlier with the mortality tables, because guaranteed means that, actuarially speaking, we have the ability to purchase our net worth ahead of time and then build and grow into it. So we're going off of, I'll use some of Trent's language. When you match a guaranteed event, which is death, with a guaranteed contract, which is life insurance, it gives you permission to enjoy your assets in a different way. And so when you've already built predictability into your financial future, you can play by some different rules. You can do things a little bit differently than other people do. And so the guaranteed side of a whole life contract says that by the interest that we promise to pay, we're gonna guarantee that to you no matter what. The non-guaranteed says if we continue to be profitable into the future like we've been in the past, we're going to continue to share that profitability with you.
And to tie it all up right there at the very end, dividends are definitely something that play a role in all of this that we teach and live and do related to becoming your own banker. And dividends can become very beneficial the more we pay premium over our lifetime. The cool thing is that that's not magic. That is sound math that they prove over and over again each year as a company that we are owners in remains profitable. Maybe we'll do an episode one day on what dividends really are and how the tax code kind of misguides us in our thinking of what it is, even though it's telling the truth. It's a return of premiums. But there's a lot more going on there that doesn't get discussed. That's very, very important in this process. So that's a review of part 2. Understanding behaviors are more important than rates of return or anything else first, because as Brock and Nate and I have all alluded to, we have to build behavior around what we believe to be true about how money works in our life. So we're really making a conscious decision. Do I believe this route of how money works in my life is going to be more beneficial than this route? And we have to be educated enough to compare the two, or we'll just keep staying where we are. So next week, we're going to talk about how do you start building your own banking system. To keep it simple, it's with paying premiums to an insurance company for whole life or protecting your net worth in convertible term. We can talk about that later. It'll be a really fun conversation. Guys, appreciate your time, your insight. Brock, I'm glad you got to go play golf, even though I was a little jealous that I wasn't playing there with you. Nate, we'll talk soon because we're always chatting it up for meeting with members after this. But we hope all of you have gained some kind of valuable knowledge that encourages you to take action with your most valuable asset, which is your time that is not guaranteed, and decide what to do with that time that will bring the most value to the things that matter to you, your family, what is most important to you. If you don't know what's most important to you, start there, because that'll allow you to make your next decision more cleanly and clearly. All right, we'll catch you on the next one. We hope it was a blessing to you, and see you on the next one.